Hey there, finance enthusiasts. Welcome back to 4 Credit Guys. Today, we're diving into the world of residential mortgage-backed securities, or RMBS for short. Don't worry if that sounds complicated. We'll break it down so even your grandma could understand it. What are residential mortgage-backed securities? Imagine you're playing with building blocks. Each block represents a home loan or mortgage. Now, what if we could take thousands of these mortgage blocks and stack them together to create one giant super block? That's basically what an RMBS is. In simpler terms, an RMBS is a type of investment that's made up of a bunch of home loans all bundled together. But why would anyone want to do this? Let's find out. How do RMBS work? The home buyer. Meet Sarah. She wants to buy a house but doesn't have enough cash to pay for it all at once. So she goes to a bank for a mortgage. The bank. The bank gives Sarah the money to buy her house. In return, Sarah promises to pay back the loan with interest over time, creating the RMBS. Now here's where it gets interesting. The bank takes Sarah's mortgage and combines it with hundreds or even thousands of other mortgages. This big bundle of mortgages becomes our RMBS. Selling the RMBS, the bank then sells pieces of this RMBS to investors. It's like selling slices of a giant mortgage pizza. The investors. People who buy these RMBS slices are betting that homeowners like Sarah will keep making their mortgage payments. When Sarah and other homeowners pay their mortgages, the investors get a portion of that money. Why are RMBS important? More money for home loans. By selling RMBS, banks can get more money to lend out for new mortgages. This helps more people buy homes. Spreading risk. Instead of one bank taking on all the risk of Sarah not paying her mortgage, that risk is spread out among many investors. Investment opportunities. RMBS give investors a way to invest in the housing market without actually buying houses. The good, the bad, and the risky. Like any investment, RMBS have their pros and cons. The good, they can provide steady income for investors. They help make more money available for home loans. They're usually considered safer than some other investments. The bad, they can be complicated to understand. Their value can drop if lots of people stop paying their mortgages. The risky, remember the 2008 financial crisis? It was partly caused by problems with RMBS. Some banks were giving mortgages to people who couldn't afford them, then packaging these risky loans into RMBS. When people couldn't pay their mortgages, the whole system came crashing down. RMBS today, after the 2008 crisis, new rules were put in place to make RMBS safer. Banks now have to be more careful about who they give mortgages to, and they have to keep some of the risk themselves instead of passing it all to investors. Why should you care? Even if you're not planning to invest in RMBS yourself, they play a big role in our economy. They affect mortgage rates, which could impact you when you want to buy a house. They influence the overall health of the housing market. Understanding RMBS helps you better understand how our financial system works. Wrapping up, so there you have it. Residential mortgage-backed securities explained. We've taken a complex topic and broken it down into bite-sized pieces. Remember, RMBS are like giant Lego structures made of mortgages, sold piece by piece to investors. They're a key part of our financial system, helping to fuel the housing market and provide investment opportunities. But as we learned from history, they also come with risks that need to be carefully managed. We hope this video has helped demystify RMBS for you. Finance doesn't have to be scary. It can actually be pretty fascinating when you understand how it all fits together. If you found this video helpful, don't forget to smash that like button and subscribe to 4 Credit Guys for more easy-to-understand finance content. Got questions about RMBS or other financial topics? Drop them in the comment below. And hey, if you're feeling like a finance whiz after this video, why not share it with a friend who could use a little financial enlightenment? Remember, understanding finance is the first step to mastering it. Until next time, this is 4 Credit Guys, helping you navigate the wild world of finance, one video at a time. Stay curious, stay informed, and we'll see you in the next one.